Goldman Sachs predicts a 35% chance of a US recession in the next 2 years, and John Molden wouldn't be surprised if stocks fell 40%. Goldman Sachs predicts a 35% chance of a US recession in the next 2 years, and John Molden wouldn't be surprised if stocks fell 40%. The American economy remains bleak, and warning signs of a looming recession continue to emerge. In a note to clients this week, Goldman Sachs chief economist stated that the bank sees odds of a recession as roughly 15% in the next 12 months and 35% within the next 24 months. Furthermore, renowned financial expert John Molden states that he would not be surprised if the stock market fell by 40% this year, as he believes a recession is imminent. Goldman Sachs predicts a 15% chance of a recession in the next year, and a 35% chance in the next 24 months. The U.S. economy is under significant strain as supply chains are restricted and consumer prices are rising as a result of the war in Europe. Bitcoin.com News recently reported on last month's Consumer Price Index data, which revealed that America's inflation rate increased sharply to 8.5% in March. A few days later, our news desk explained how hedge fund manager Michael Burry believes the Federal Reserve of the United States has no intention of fighting inflation. Furthermore, renowned author Robert Kiyosaki believes hyperinflation and depression have already occurred. Goldman Sachs predicts a 35% chance of a US recession in the next 2 years, and John Molden wouldn't be surprised if stocks fell 40%. Jan Hotzius, chief economist at Goldman Sachs. Goldman Sachs chief economist Jan Hotzius detailed Goldman's forecast and the likelihood of the United States entering a recession in a note sent to investors this week. According to Hotzius, the Federal Reserve is on a hard path to a soft landing, and Goldman forecasts a 35% chance of a US recession in the next 2 years. Our analysis of historical G10 episodes suggests that, while strong economic momentum limits the risk in the short term, the policy tightening we expect increases the likelihood of a recession. As a result, we now see a 15% chance of a recession in the next 12 months and a 35% chance in the next 24 months, Hotzius explained. Hotzius went on to say that historical patterns indicate that the economy may hit a snag. He pointed out that 11 of the 14 economic cycles since World War II have resulted in a recession within a 24-month period. Taken at face value, these historical patterns suggest the Fed faces a narrow path to a soft landing as it seeks to close the jobs workers gap and return inflation to its target of 2%, Hotzius added. Ray Dalio, founder of Bridgewater Associates, predicts a period of stagflation. Goldman's chief economist is among many who predict a slowing of the U.S. economy in the coming months. Over the last few months, a large number of financial analysts and economists have attempted to forecast the future of the U.S. economy. Goldman Sachs predicts a 35% chance of a U.S. recession in the next 2 years, and John Molden wouldn't be surprised if stocks fell 40%. Ray Dalio is the founder and co-chief investment officer of Bridgewater Associates. Ray Dalio, the founder and co-chief investment officer of Bridgewater Associates, stated in an interview with Yahoo Finance published on April 4 that he sees a stagflationary environment. Dalio stated, "So you have enough Federal Reserve tightening to deal with inflation adequately, but it is too much tightening for the markets and the economy. So the Fed will be in a difficult position a year from now if inflation remains high and begins to weigh on both the markets and the economy. I believe we will most likely experience a period of stagflation. Then you must understand how to construct a portfolio that is balanced for that type of environment. My instinct tells me this will not be a 12-month wait," says best-selling author and financial expert John Molden. John Molden, a well-known financial expert, predicts an economic downturn as well, recently stating that he would not be surprised if the stock market crashed by 40%. Fed Chair Jerome Powell and his team are hoping to engineer the fabled soft landing, Molden wrote. "I seriously doubt they'll be able to pull it off," he added. Goldman Sachs predicts a 35% chance of a U.S. recession in the next 2 years, and John Molden wouldn't be surprised if stocks fell 40%. John Molden is a well-known financial expert and New York Times best-selling author. Molden noted that the 2-year Treasury yield has recently surpassed the 10-year Treasury yield, resulting in an inverted yield curve. That is the polar opposite of normal. Then again, a lot of things have been out of the ordinary lately, Molden explained. The financial analyst is well known for correctly forecasting the US recessions of 2000 and 2008, and he believes the warning signs are the same this time. "We have many indications that a recession is on the way," writes Mauldin in a blog post. The financial analyst's blog post concludes with the following: "There is no way to accurately predict when a recession will begin. My gut feeling tells me that this will not be a 12-month wait. I believe that things will continue to slow down, and that one day we will look up and see a recession. And then we'll start growing again a little later. That's how these things function."